Are you looking for a steady stream of income from your investments? Do you want to build wealth over time without having consistently monitor your portfolio? The dividend ETFs and mutual funds might be the perfect solution for you. Hey, I'm Zeke and welcome to the Dream Green Show. In this video, I'm going to be showing you guys the top dividend ETFs and mutual funds that can help you make money and reach your financial goals. Whether if you're a seasoned investor or just starting out, this video is packed with valuable information that you do not want to miss out on. Now, some of these stocks I'm going to be bringing you in this video, I have never talked about on this channel before. They're going to be brand new to you, and some of these stocks I actually own inside of my portfolio. So make sure you stick out the entire video all the way to the end so you don't miss out on any crucial information. Now, when it comes to investing into dividends, ETFs and mutual funds offer several benefits. First, they offer instant diversification. With one single purchase, you can own pieces of many different companies and sectors, reducing your risk and give you exposure to a wide range of opportunities. Second, they are convenient. You don't have to do any research analysis required to pick individual stocks. Instead, you can rely on the expertise of a professional fund manager to do the work for you. And third, they're cost efficient. ETFs and mutual funds typically have lower fees than actively managed portfolios, which means you keep more money, you keep more of the money working for you. So let's dive into the top dividend ETFs and mutual funds you should consider if you want to make some passive income. I'm going to be showing you guys 6 different ETFs on how you can make $100 per month or $1,200 a year in passive income from dividends alone from these 6 different dividend paying ETFs. But first, I have done some research and that said if I repeat something 3 times, then you're more likely to do it. So I want you guys to go ahead, scroll down and hit that thumbs up button and subscribe to the channel so you don't miss out on any future videos. I want you guys to scroll down and hit that thumbs up button and hit that subscribe button so you do not miss out on any future videos. Hey guys, if you would like to support this channel in any way for free, the best thing that you could do is scroll down, hit that thumbs up button and hit subscribe so you do not miss out on any future videos. But enough talking, let's go ahead and dive straight into it. Welcome back, dreamers. Now, usually I'll give you guys the banger dividend stock with the highest dividend yield that'll make you the most passive income at the end of this video. But in this video, I'm going to try something a little different. I'm going to give it to you guys first. Now, what if I was to tell you guys I could guarantee you 11.5% return in a single year and still be invested into the S&P 500 index? It also has a low expense ratio and carried by one of the most reputable banks, JP Morgan. With this one ETF, you don't have to invest into very risky dividend stocks, individual dividend stocks to have a decent return. If 11.5 dividend yield sound interesting to you, then you might want to stick around. But first, this video is brought to you by Webull. Sign up now by clicking the link down in the description. Deposit any amount of money. Guys, right now, if you sign up with Webull, you get 2 free stocks. Boom, just for signing up. If you deposit any amount, if you deposit 1 penny, you get 6 more free stocks. If you deposit up to $100, you can get up to 12 free stocks. Each of them valued all the way up to $7 to $3,000. That's right, guys. If you just sign up, deposit any amount of money, this is by far the best deal. You can make all the way up to around $12,000 in free money. Once again, once you get those free stocks, you can keep them inside the portfolio and decide to use it, or you can sell those free stocks and withdraw all of your money. Guys, it's literally free money. Do not miss out on that opportunity. I'm gonna say it 3 times. Guys, sign up, deposit your money, get free money. Guys, sign up with the link down in the description, deposit your money, get free money, withdraw it, or use the platform. This is by far one of their best offers. So yeah, guys, if you want to check that out, the link is going to be down in the description. That is Webull. All right, guys, here goes. The stock with an 11.5% dividend yield is JEPI, JP Morgan Equity Premium Income. Now, what they do with their shares, you guys can see right now it's at $54.74 at the recording of this video. Now, what they do with all of the shares inside of their company, they diversify, but they sell options. They don't buy options. They sell options on the stocks inside their portfolio and generate a high dividend income that way from selling by collecting the premiums on selling these options inside their portfolio. That's how they're able to generate such a high dividend yield inside of their portfolio. You guys scroll down, you can see their top 10 holdings. Of course, it's JP Morgan, ExxonMobil, and Comcast. And the sectors that they invest into is industrials, healthcare, and technology. So if you scroll down on Robinhood, it do say that they have 11.15% dividend yield, but it's closer to 11.5% dividend yield. And if you wanted to make $100 from JPI with 11.5% dividend yield, they pay out their dividends every single month. So in order to make $100 a month, JPI, they're giving you $6.42 for every share you own in dividends per year. That means you would have to have around 187 shares, and that will cost you $10,222 in order to make $100 every single month in dividends and passive income from JEPI, JP Morgan, with 11.5% dividend yield. That is amazing, guys. If I throw in a $10,000, I'm going to get $12,000 coming out at the end of the year. That is an amazing opportunity. And remember, you're getting $100 per month in dividends from JEPI, so you could actually almost buy 2 more shares every single month from that dividends if you decide to reinvest it. That's called the snowball effect, and that is going to explode your dividend portfolio. So that is the first one with the highest dividend yield on this list, JEPI, JP Morgan Equity Premium Income. All right, guys, number 2 is SCHD. This ETF invests in U.S. companies with a proven track record of paying dividends. The fund aims to track the performance of the Dow Jones U.S. Dividend 100 Index, which is made up of high-quality dividend-paying stocks from a variety of sectors. SCHD is a low-cost option for investors looking to invest inside the U.S. dividend-paying stocks, and it offers exposures to blue chip companies such as Johnson & Johnson, Procter & Gamble, and Coca-Cola, as well as different technology giants like Microsoft and Apple. Now, if we take a look right here on SCHD, over the last year, they are down 1.5%, but this is the benefits of investing into ETFs. While they're down 1.5%, most companies are down 40%, 60%. Some of them are down 80%. So this is the safety that you get from investing into good quality ETFs like Schwab U.S. Dividend Equity Funds. Now, they do have a dividend yield of 3.31%, and they pay out their dividends every single quarter. That means you'll receive 4 payments a year in dividends from SCHD. Now, if we scroll down, their top holdings is in the financial sector, technology sector, and healthcare, and their top 10 holdings is Broadcom, Texas Instrument, and Cisco Systems. Now, SCHD, they have a dividend yield of 3.31%, paying out $2.50 per share over the entire year for every share that you own of SCHD. That means you would need around 468 shares of SCHD to make $1,200 a year. So that's going to cost you $36,290 invested into SCHD in order to make $100 a month or $1,200 a year in dividends. So let's go ahead and move on to stock number 3, and that's DVY. Now, stock number 3, iShares Select Dividend ETF, DVY. This dividend offers exposure to U.S. companies with a history of paying high dividends. It aims to track the performance of the Dow Jones U.S. Select Dividend Index, which includes companies that have a consistent track record of paying dividends and have the potential to deliver stable income while also providing capital appreciation. The ETF may hold stocks in large, mid, and small cap companies, and it's designed to be diversified across multiple industries, reducing sector specific risks. If you're looking for a way to generate a steady stream of income from your investments, DVY may be a good option. So if you scroll down and look at the top 2, you can see that they're investing into utilities and consumer defense. Their top 10 holdings is Valero, Altria, and Onigo, something like that. I don't know. I'm pretty sure I butchered that. And Philip Morris. Now, DVY, they have a dividend yield of 3.3%, paying out $4.14 per share over the course of an entire year. So you'll need around 290 shares of DVY in order to make $1,200 a year. So that will cost you $36,359, just a little bit more than SCHD. If I didn't mention before, DVY is also a quarterly paying dividend stock. So let's go ahead and move over to stock number 4, VIG. All right, guys, VGI is going to be a little different, so make sure that you check this out. Stay to the end of this. All right, so VGI is an ETF focused on U.S. companies that have a history of growing their dividends over time. It aims to provide exposure to high quality dividend paying stocks with a focus on long-term growth. The fund seeks to track the performance of the NASDAQ U.S. Dividend Achievers Select Index, which is made up of companies that have a track record of consistently increasing their dividends. VIG is a great choice for investors who want to build a portfolio of high quality dividend paying stocks with a focus on long-term growth. Keyword guys, long-term growth. Now VGI, they have a dividend yield of 1.89%. Now I know you're saying, hey, that's not even close to 11.5%. That's only half of 3.8%, but VGI is almost a 2% dividend yielder at 1.89. Now over the last year, they are down 3.16%. But if you take a look over the last 5 years over the long-term growth, they grow a lot quicker than other ETF. They're up 50% over the last 5 years, guys, through a recession, through a pandemic. VGI is up 50% over the last 5 years, which is absolutely insane. That's why I said they focus on long-term growth. They might not have the highest dividend yield, but they have excellent long-term growth if you want capital, if you want appreciation on your investments. Now if we scroll down, we take a look at that top 10. Theirs is in the financial sector, healthcare, and consumer defense. And their top 10 holdings will be United Health, Microsoft, and Visa. Now with VIG, they have a 1.8% dividend yield, paying out $2.97 per share that you own of VGI over the course of a year. That means you would need 404 shares, which means you would have to invest $63,434 in order to receive $1,200 a year. I know guys, that is a lot of money, but just imagine 5 years from now, if they continue to grow 50%, we'll have made a lot more money in appreciation than you would have in dividends. It would not even be close. So that's one of the reasons VIG is on this list. Now we're going to move over to number 5, NOBL. Number 5, ProShares S&P 500 Dividend Aristocrat ETF, ticker symbol NOBL. This ETF invests into S&P 500 companies that have a history of consistently increasing their dividends over time. It aims to provide exposure to high quality dividend paying stocks with a focus on long-term growth. The fund seeks to track the dividend performance of the S&P 500 Dividend Aristocrats, which includes only companies that have increased their dividends for at least 25 consecutive years. NOBL is a great opportunity. It's a great option for investors who are looking for a diverse portfolio of high quality dividend paying stocks. Now the key word in there was Dividend Aristocrats. Dividend Aristocrats is any company that's inside the S&P 500 and also increase their dividends every single year for the last 25 years. That means they last through a recession, depression, pandemic, all of that. They found their way to increase their dividends every single year for the last 25 years. They might not be the highest dividend yielders, but they are absolutely some of the safest dividends to have inside your portfolio, because you'll have a lower risk of them cutting their dividends. In fact, over the last 25 years, they increased it every single year. So 25 years from now, their dividend yield will be even higher than it is today, because they increased theirs every single year. And in order to become a dividend king, you have to increase your dividends every single year for the last 50 years. So a lot of these dividend aristocrats are striving to be dividend kings. So this is why this is on this list. Ticker symbol NOBL. So the sectors they invest into is industrials, healthcare, and financial services. Now they have a dividend yield of 1.86%. The reason it's low is because they have amazing growth again over the last 5 years. They're up 45%. They have a 1.8% dividend yield. They pay out $1.74 per share over the course of a year. That means you would need 689 shares or $64,613 invested into NOBL in order to receive $1,200 a year in dividends. Once again, these are companies, these are blue chip caliber companies that increase their dividends every single year. So that means they're going to have amazing growth and capital gains and amazing growth in dividend yields. So that's going to bring us to our final stock, SPHD. Let's pull that up right quick. Now I do have SPHD inside of my portfolio. I'm up a little bit, up 11%. Now the Invesco S&P 500 high dividend low volatile ETF SPHD. This ETF invests inside US companies with a history of paying high dividends with low volatility compared to the broader market. It aims to provide exposure to high quality dividend paying stocks while also offering lower volatility compared to the broader market. The fund seeks to track the performance of the S&P 500 low volatility high dividend index, which includes companies that have a track record of paying high dividends and having a lower stock price volatility compared to the broader market. Now, what that means is that they're going to have a pretty decent dividend yield. In fact, that dividend yield is 3.75%, which is absolutely amazing. But over the last 5 years, they're only up 9.4%. That means you're going to have the consistency of dividends every single year, and they're going to increase their dividends every single year. But the growth of your stocks inside of that portfolio is not going to be as high. So over the last 5 years, they're only up 9%. But that means it's not going to be very volatile. It's not going to go high and low every single week, every single month. It's going to pretty much stay anywhere from around $35 to $50 over the next 5 to 10 to 25 years. And that's SPHD. With SPHD, you'll collect $1.71 for every share that you own. That means you would need 701 shares or $31,971 in dividends to collect from SPHD. If you ever see SPHD at a good buying opportunity, any of these dips around here, any of these dips right there, if you see good buying opportunities, you could go in and pick up some shares. I'm up a little bit over 11% on SPHD. All right, guys, that's it. In conclusion, dividends, ETFs, and mutual funds are a great way to add a reliable source of income to your investment portfolio. They offer diversification, convenience, and cost effectiveness, making this a smart choice for anyone looking to build their wealth and reach their financial goals. Thanks for watching. If you made it to the end of this video, let me know down in the comment section if me saying subscribe to this channel 3 times worked on you. Did you subscribe? If you made it to the end of this video, you might as well scroll down and subscribe. And if you made it to the end of this video, you might want to pick up some of that free money from Webull. I'm gonna also leave a link in the description to Moomoo. If you sign up with that, deposit $100, you can receive up to $30,000 in free stocks. This is great free money opportunity, guys. And I'm gonna leave a link down in the pinned comment section. That'll take you to my Patreon. The Patreon will take you to my Discord. Inside of my Discord, I post every single time I buy and sell a stock. I also post my option trades, my day trades, my technical analysis, and we also have pro day traders in there that post their option trades every single day. So if you want to be a part of a community of traders, of investors that want to be financially free just like you, go ahead and check out that link down in the pinned comment section. But other than that, guys, let me know down in the comment section, are you a dividend investor? Do you have any of these dividends inside of your portfolio? If you do, let me know how that planned out. And if I missed any of the top dividends in this video, please drop that down in the comment section with any other questions and ideas for future videos. Other than that, I'm Zeke, bring you the Dream Green Show, and I'm out. Peace.